Okay, cool. So in this video, I'm going to show you exactly how I would build an off-market campaign for Sherman, Texas. I actually feel like every time I say the word Texas, Matthew McConaughey is going to pop up. Anyway, we're going to look and build a campaign to find 1 to 4 off-market properties that actually cash flow. Because let's face it, it's been a minute since anything on the MLS has cash flow. Now things are starting to turn in certain markets. And maybe I found a couple here that we're going to look at. So, hey, y'all, my name is Jay Helms. I am the founder of W2 Capitalists and BRRRRs for Busy Parents. My wife and I, plus hundreds of members, moms and dads in our community, have used this same system to build 1 to 4 rentals, or to buy 1 to 4 rentals a year while still working jobs, and ever so important, raising their kids, right? So here's the plan for this video. We're going to do a quick market overview. Excuse me, we're going to do a quick market overview of Sherman and why it makes sense to target there for BRRRRs. The more I got into this, I kind of like Sherman. It's outside of our investing area, but it's got a lot of positives. I really like it. I'm going to show you, so quick market overview, how I would build a list for you if you were running your campaign, like for you, like as we do it for so many others in our community. What our mailers actually look like. And then finally, if we got time, if I don't get long-winded, we're going to underwrite a couple properties that I found on the MLS. So with that being said, let's get into the fun stuff. All right. So we're going to start with me finding the right screen here. All right. So market brief. Population, Sherman, Texas, 43,645. This is from the 2020 census.gov data. Here's the impressive part, really impressive part. Growth since 2010 is plus 13%. I was having a conversation with somebody yesterday. We were looking at their market, and he was a little deterred that it was only I think it was like 2 or 3% growth. 2 or 3% population growth is very healthy. It's better than negative, right? But what I have seen and what I've experienced just where we live, when population growth gets in the double digits, typically infrastructure is hard to follow. So this is pretty cool to see. I'd be wondering if anybody here watching this or sees this, if you're in Sherman, Texas, how's traffic? How are the schools? What's going on there? Is traffic just horrible? Are the schools overpopulated? I'm curious if those are the cases for y'all. So days on market, 81 days. I put that in red because that is leaning toward some very good triggers of potentially prices are going to shift here pretty soon. We're going to look at, there's a couple properties I found that were on the MLS, recently got removed. We'll take a look at that in a minute. If you're not familiar with where Sherman, Texas is, it's about 60, 70 miles to the north of Dallas-Fort Worth area. This is pretty common. This population growth is pretty common in what we see when big cities start to grow and expand. It seems to just keep pushing out. It's usually a 30-mile radius ring, and then once things get overpopulated there's another 30-mile radius ring that pushes people out. So one thing I did find very curious here for Sherman is that a lot of folks are commuters. Like a couple of reports suggested that people commute back and forth to Dallas, Fort Worth, 60, 70 mile one way for work. It's very interesting. To me, that's a long haul. Maybe not for folks in Texas. Medium home value, 204,000, great range for where we typically see rental properties. Gross rent. We're going to challenge this here in a minute with a couple of different resources. This came from, where did this come from? I'm not real sure. Anyway, we're going to challenge that. We're going to verify it here in just a minute. And here's why we like for the BRRRR fit. It's older blue collar housing stock with solid renter demand. This is where it talks about the Dallas-Fort Worth commuters. Hopefully they're just getting into Plano and don't have to go all the way in. That's a long drive for me. That's a long drive for me. Anyway, real quick on Sherman, Texas, you're going to see this here in a minute when I build the list. There's 1,100 plus rental, non-owner occupied single family residents that hit our criteria. Our goal with this type of method and what we're doing with this type of list, our tired landlord list, is to find 1 to 4 off-market properties per year. So we're going to go through this method, identify, contact, and there's follow-up. By the way, if you're a busy parent, don't worry. There is no cold calling. You do not have to build a VA team. This is a pretty simple method that we've been running for years and helping other people run for years, that usually yields 1 to 4 properties a year. So, all right, let's get into building the list. Let me make sure I'm sharing the right screen. And I apologize for the cough. Try to do better on the mute button. But we're going to take a look at PropStream. If you're not familiar with PropStream, it is a big data analytics software. We've been using this for years to run these types of campaigns and to build our tired landlord list. The good thing about working with us is if you and having us do your mailers, you don't have to have a subscription. We will pull your list for you. So I'm going to go in here and choose Sherman, Texas. As you can see, it was saved because I did some research earlier, and we're just going to start building the list. So by the way, if you want to play around with PropStream, whether you're in Sherman or anywhere else, and you want to look at a different type of list, absolutely. There should be a link somewhere around where you're watching this for you to get a free trial. I think it's like 7 days or maybe 25,000 leads. They're always doing some sort of promotion with the link that is around this. So these are the initial filters. There's a lot of ways we can filter the list. We primarily focus on tired landlords because we already know it's a rental property. By the way, tired landlord, as PropStream defines it, as someone who's owned the property for at least 15 years and it's non-owner occupied. Okay, so take that off for a second. Let's explain as we're building this. I like those for a couple of reasons. Number one, they typically have more than one property. They also, we know it's a rental, but most of the tired landlords that we run into, they're going to be a little bit older in age, which means they either have not kept up with a property. There's some disrepair, right? Like, hey, that's a good buying, like that's a good discount option. And or they've got a tenant in place who's been there forever and probably have not gone up in rent, right? So there's a couple different things there that we can tap into in just a minute. By the way, if you're watching this live or on replay, comment whatever questions you have. I will get to them. Okay, back to PropStream. So couple of things. Let me show you what this is. You can search for city. You can actually search for zip codes. You can get down to a specific address. What this is going to do up here in the right-hand corner, this orange box, that's how many properties come out through our filter. So right now, when we look at Sherman, Texas, there's 28,490 properties inside the city limits of Sherman, Texas. Right now, this is everything from raw land to commercial. Okay, so you're going to see this number change as we build this list, and we're going to stop. PropStream makes it very easy with us coming down here. We can choose tired landlords. We already see that there's 8,054 tired landlords. Reminder, that is owners who have owned for at least 15 years, right? Non-owner occupied properties. So we're going to continue on here. We're going to make sure we focus on residential. We're going to choose single family and multifamily 2 to 4. You see this number right here changing. Now we're down to 3,750. Our target for most of our campaigns, we're looking for somewhere between 300 and 500 properties in a list. Sometimes there's more, sometimes there's less. 300 to 500 mailers per quarter has typically yielded 1 to 4 properties per year for our members. Okay, so that's why we kind of put some real hard data around that. Sorry, my nose is itching. So continuing on here, residential, single family, 1 to 4 units. We are going to, for most cases, we exclude HOA and pools just because most landlords do not want to deal with that. pools, there's just a liability and more maintenance. But however, I was talking with a guy in Las Vegas a few weeks ago, and he said, "Oh, no. He goes, we only invest in properties that have HOAs and pools because we know they're really high end." Anyway, that was his. So, but for the most part, we exclude both of those for the traditional single family rental. We're going to skip down to MLS. We want to make sure they're off market. Valuable lesson I learned here is making sure that's checked, because otherwise you get a very interesting phone call from a very confused, sometimes angry realtor. But and that still happens. You know, this data, it's not live. There could be something posted on MLS or go live on the MLS today, and then your mailer goes out tomorrow. There's, you know, crosses in the it crisscrosses, whatever. It you know, it collides. Makes for a fun phone call. But anyway, the last thing that we choose here is owner information and occupancy. We don't have to mess with occupancy because we chose tired landlords at the top. If we want to, we can say owner occupied. No, it's not going to change anything here. And then we want to choose individual. Individual means it's owned by a single person or persons, right? So think of mom and pop. Basically, it's no entities, no trust, anything like that. It is just an individual. The reason we do that, biggest reason we do that, is because they are the easiest people to get a hold of. Okay. All right. So you see our number here. We've got 1,178 properties that fit that criteria within Sherman. This is a nice little map. If we wanted to narrow it down even further, I see there's one over here for 508, 2.6, 1.2. Typically, those are not going to be the types of rentals we go after, a little bit out of our budget. So we're going to come in here and refine this list a little further. We're going to change the estimated value to 300,000. We're going to leave the minimum just as it is. So now we're down to 854 properties, which is awesome. It's a good solid list to start with. Okay. Now here's how we take that. So now here's our data, right? So now let's clean this data up a little bit. We're going to save it as Sherman, Texas demo. We're not choosing skip trace. Again, the only time you would choose skip trace is if you wanted to potentially send emails or do phone calls. Our program does not require you to do either one. All right. So now let's go to contacts, my properties, and we're going to scroll down to Sherman, Texas. And we're going to do a couple things with this list. First thing I'm going to do is sort by address. We're going to remove, and I'm not going to walk you through this because it should take some time. We're going to remove, I'm going to scroll down to the bottom. We're going to remove any property here that does not have a numerical value associated with it, because we cannot have intelligent conversation with the owner about it. Also, in most cases, what this means is there's never been established 911 service there, meaning there's never been a structure on it to have utilities on there, or it's just bad data, right? So we can kind of look at this and say from 775 to 854, there's about 80 records that we're not going to use on that. The second thing that we're going to do is we're going to scroll over here to, this is owner information. If we did a skip trace, make sure you guys are still seeing what I'm seeing. Okay. If we did a skip trace, this is where all the mobile, landline, and emails would come up. We're not doing that. It's just a very awkward phone call for most people. Anyway, we're going to skip over here to mailing address. This is the mailing address of the owner. Going to give it a minute to sort. We're going to go down to the very bottom again. I guess we could sort it again and it would push these things to the top. We're going to look for anything that has a P.O. box on it, which there are several here. The reason being, we receive more return to senders from P.O. boxes. Okay, there's quite a few. So there's about 80 of those too. So I just like removing them because I hate wasting marketing dollars on something that has a high likelihood to come back. So we have started removing PO boxes from our mail outs. Okay. Here's an interesting thing. I just saw this though. There's one person that's got 3 rental properties in a PO box. I might leave that one in there. Something tells me that's still an active mailbox. But if it's a single person, one mailbox, those are going to come back. High likelihood those are going to come back. Okay. So we export the list. How are we doing on time? I got a hard stop at noon. What time is it? Where's my window? Okay, we got 12 minutes. Let's do this. Let's go over to, let's go underwrite a property. So I use deal check. Make sure that didn't kill the, okay. If you have a calculator or a spreadsheet, absolutely use it. If not, highly recommend you looking at deal check. That's something I've used for 5-6 years now. It just makes it so much easier to do these type of underwritings because we are married, busy parents, and we don't have time to sit down and underwrite, for 30 minutes to an hour. So here's a couple of properties that I found on the MLS, and then there's 2 that were taken off. Let's talk about the 2 that were taken off. Just for real quick, it looks nicely done. Here's what I mean by taken off. It shows, Zillow shows it as off market. We can scroll down here and look at the history where this property was. It was sold in 22, and then in August of 25, it was listed for sale at 235. They dropped the price a couple months later. Dropped the price again a couple months later, and then the listing was removed in February. They could have turned it into a rental. There is a strategy I've heard a couple people doing that, or realtors doing that. If a property does not sell, they'll take it off the MLS. We're about in that time frame where, this one didn't sell over winter. It's very common for things to sit longer in winter. Realtors will take it off the MLS for 30 or 60 days to let I don't know if it's an algorithm or just the equation to reset, but then come back and relist this maybe toward the end of March or maybe toward the end of April. Then it looks like a new listing, right? And it hasn't been sitting on the market for 60 days plus whatever from August. And that ties right into the busy buying time, right? When April kind of kicks things off. But this looks like a very decent property. I don't know if this was a rental or somebody's primary house. It's pretty sharp. I don't know why there's not handles on the kitchen though, on the kitchen cabinets. There's no pulls. That's interesting. No pulls. Also, I thought that was a odd door. That's a reflection in the mirror. Okay. This looks nicely done. It looks like it's completely renovated. But it sat on the market, right? Remember our market for Sherman, Texas was 81 days. This was August 23, 9, 10, 11. Well over, right? Well over. So we'll see. Would love to know the story on why they took it off. Here's another one. Zillow showing it's off market. I think this is interesting. This estimate was 196. Let's go down here and look at the history. So it listed for sale for 209 in July. Had a price change to 205. Not a big drop in November. And then, they took the listing off just a few weeks ago. So, it's just interesting to me when I see these kind of things happen, but it looks like a great rental property. Let's do this. These are 2 active listings. I can almost tell you just by looking at this one's not going to cash flow. Let's look at this one. This is 1709 East Chafin Street. Looks pretty decent inside. Very well kept on the outside too. I just, when I look at the outside of this house, I would not expect the inside to look like this. The archway is very nice. Was that? That's a virtual staging. I would not have realized that if they did not put the other pictures in. This is a little AI doctored photo. Here's the actual, right? Y'all, when you're sending your listings, I don't know if they couldn't clean that up off the carpet, but pictures are big. Like, it's key. I think with a different lighting, different setting, these are going to look a lot better. I'm not a photographer, but I just know that pictures are key. Okay, I got like 7 minutes. Another virtual staging photo. Although I do appreciate that they showed both, right? Because I wouldn't want to walk in and be like, oh, this is interesting. They got carpet which looks like a dining room. Decent kitchen. Again, no handles or pulls on the cabinets. What is that about? Is that something, Sherman, Texas, folks? Is that something you guys just do? We don't put handles and pulls on the cabinets. I am hoping that this flooring here is some sort of LVP or tile, because otherwise you've got wood floor in a bathroom. Different shade, different color, kind of hard to tell what it is, but that threshold piece makes me think that it's actual wood, which I would not want in a bathroom, but we'll see if we can find some information on it. Another virtual stage photo. It looks awesome, right? Another virtual stage. I like how they set it up, and they did both. Decent property. I would like to have it in my portfolio if I've invested in Sherman, Texas. Okay, here's what we're going to do with this one. I'm going to go see if it says wood floor in the bathroom. I'm just scanning this real quick. This currently says it's tenant occupied, so that'd be interesting. I want to know what they're paying for rent. 181 days on Zillow. Likely to sell faster than 93% nearby. Okay, Zillow, let's have a conversation. Our average days on market for Sherman, Texas is 81 days. This has been on here for 181 days, and you're still projecting it's going to sell faster? Anyway, let's go to deal check. I'm not going to go down that rabbit hole. All right, so rentals, we're going to choose this as a rental. One thing I love about deal check is we could look at, if it was a BRRRR, we could add in, probably our hard money loan and then our refinance out of it. If we're going to treat this as a flip, as you can see, I don't do any wholesaling. So I think that one in there, yeah, example, that came as default with the with the software. So we're going to add property. We're going to do the defaults. We're going to import the data. Notice I just copied and pasted the address from the Zillow listing. I'm going to search. It immediately starts bringing up everything from the listing. House built in 1930. Why that's important is you've got a couple things you probably need to check for. You're always going to have to provide asbestos, not asbestos, but lead paint disclosure. Probably, I'm not familiar with Texas laws. I know in the state of Alabama and the state of Florida, you have to provide lead paint potential exposure in anything that was built prior to, what was that, 78, 80, something like that. 3 bed, 2 bath. Although I only saw 1 bath in the pictures. What does this go to? That's interesting. Oh wait, it says 3 bed. Oh, this is a second bathroom. Okay. Um, updated in 2008. It has had a lot of work done to it. You just want to make sure that all permits were pulled, especially with structural stuff, right? Or the big stuff, HVAC, electrical, plumbing. Those are the big ones. Okay. Deal Check's estimate. So this is property value estimates. Deal Check has a relationship with Realtor.com. They both have it at 171 and 184. Zillow has it for 189. So we're going to go with the one in the middle just for fun. Rentcast estimate. So Rentcast is Deal Check's built-in rent projection, very comparable to Rentometer. So we're going to just look at this. If you remember from our market brief, we were looking at what, $1,300 a month. And I said we were going to verify or challenge that. So here's what we're going to do. So Rentometer, 3-bedroom, 1+ bath. It is a house. Let's see what they come up with. Average 1583. Awesome. Deal Check had it at 1580. Cool. Right on time, right? Property tax 3981. You always want to check what property tax is and how it's calculated. If it is calculated on the sale of the property, that just seems like a high amount for property tax of a house this size. You always want to check what property tax is, when it's, and how it's calculated. If this is the number based off of when it last sold in 22, chances are you're paying more for the property today. Wait, this one wasn't sold in 22. When was this? This was sold. We didn't even look at that, did it? Oh, this says 2024. Interesting. That's odd to me. Bought in 24 and it's been listed. Maybe somebody figured out they didn't want to be in the landlord business. It's a key sign, right? Like that may be a pain point for somebody. Anyway, back to property tax. You want to make sure that when you buy the property, you calculate what the taxes are going to be based off of how that county calculates property taxes. Property insurance. This is probably right in line with what we see for most single family homes. I just run these through Steadily. Steadily is our partner affiliate, insures most of our portfolio. Get a quick quote from them. There should be a link somewhere around this video for you to do that. All right, and then here are the photos from the listing. Okay. Oh, I got to make this fast. Okay, here we go. We're going to just change the purchase price and the after repair value to the same thing. We're going to make some assumptions here. Okay, so purchase price is going to be 25% down because we're using a DSCR loan. We're going to get the DSCR loan somewhere around 7 because we have excellent credit, and the banker that we work with likes us. That has no idea. That has no bearing usually on your rate. Anyway, purchase cost 3% of the purchase price. We're not going to put anything. We're going to always put something. If it's a tenant occupied property already, usually, I don't think there's ever been a case where we bought a property that was already occupied and the resident didn't say, hey, I've been reporting this issue's been for years and it's never been addressed. I always put a minimum of $1,000, right? We're gonna get a little more. We're gonna leave the rent where it is for the sake of time. Vacancy, we can leave it 10%. There is no other income. Operating expenses, I do 40% because I self-manage. And these are long-term projections. I usually leave those all as default. This is land value depreciation. We're going to leave that alone. Okay. So based on our criteria, or based on the numbers we have as of today, this property does not work for us unless we are investing for tax flow, right? We're not investing for tax flow personally. We invest for cash flow. So we want this to not be a red number. We want it to be a positive number. We also want cash on cash to be around 8 to 10%. Let me just look at this just to make sure I didn't mistype anything. Those property taxes, if that's correct, that's probably the deal killer right there. I don't have a quick and easy way to check that. Otherwise, I would just go to Grayson. I think it's Grayson County property appraiser site, see what the last tax bill was, and then make those adjustments. Actually, let's do that real quick. I can postpone for. Maybe not. Taxpayer portal. What's that? I should have looked this up ahead of time. But anyway, that's probably what's killing cash flow. Let's assume it's accurate. Sometimes deal check does pull in some erroneous information. It's always good just to verify and double check when they do bring that in. But let's assume that it's correct. Okay. Based on our criteria, make sure I've got our criteria set correct here. Debt coverage ratio, I always put 1.25. This is what most banks look at to make sure that the income coming in can cover 1.25 of the debt. Just means less likely they're going to have to foreclose on you. Cash flow, at least $100 per month. Okay. So based on what we know about the property, assuming the data is correct, in order for us to get to $100 a month in cash flow, a minimum of 8% cash on cash return, and a 1.25 debt coverage ratio, we would have to get this property at $110,000. Now, chances are they're not going to go for that because they just bought it a year and a half ago for the same price. So I want to change the property tax. I want to find out what the property. I got 10 minutes maybe. Okay. You guys see this? Okay, cool. By address 1709. See if that's enough for it to come. Nope. Chafin Street. Let's try this. We get all the properties that start with 1709. This is not showing up. Is this the correct address? That is weird. So somewhere, maybe the street number is wrong. Oh man, now it's getting personal. This shouldn't be that hard. Bear with me just a minute. Found it. Okay. See if we can get some values here. If they'll tell us what the last tax bill was. I don't see it. Gives us the as-is value or appraised value, but it doesn't tell us what the tax bill was. Okay, well, sorry. I would just go through there just to make sure. It just seems very high for property taxes in Texas. Okay. But that's where we need to be. We want to double check, right, where property taxes might be. Make sure I don't have anything else wrong here. Okay. Sorry, guys. I got to get going. Thanks for going down that rabbit hole with me. Sorry about that. I will do that sometimes. All right. So just closing real quick. If you're a married, busy parent and you've got 0 to 3 rentals and you want to find 1 to 4 good cash flowing deals this year, reach out. Today we've been looking at Sherman, Texas, but transparently we work with married, busy parents all over the U.S. and doing these exact same systems. Matter of fact, in the floor next to me, we've got 400 mailers going out today for North Carolina. So reach out, make a comment, send me a message. Have a great rest of your Thursday.